Welcome back, everyone, to the second round of this pitch battle session, whereby 5 new startups will pitch in front of you for 5 minutes, and then they will have 5 minutes to address any questions from the jury here or the audience. The jury is composed of Pauline Brunel from Blackfin, which is a European VC, from Koen from Volta Ventures, which is a Belgian and Netherlands-based VC, from Xavier HUERRE from beangels, which is a Belgian-based VC, and we have Aoife from Microsoft. I don't need to introduce you to Microsoft, of course. We have Isabelle from Cedar Fund, which is a Belgian-based VC, and then we have Kanishk from MiddleGame Ventures, which is based in Luxembourg, US, UK, and Ireland, right? And then myself, Jean-Christophe, VERCAUTEREN, I'm the moderator. I work for Simon Brown, which is a law firm, not a VC. Before listening to all these new exciting startup projects, we'll first listen to Gabriel Levy from Weequity, who is the winner of last year's startup pitch. So, Gabriel Levy, the floor is yours.
Good morning, almost lunchtime for everyone. I'm Gabriel. I'm one of the founders of Weequity. Weequity is an ESG data startup. You probably all heard the 3 letters and the acronym ESG. It's been quite buzzing around for the last few years. Thanks a lot. So I'm here today. I have 5 minutes. I won't bore you much more. I've been asked to give you a little testimony from where I was a year ago, where I'm today, and to share a few stories about the journey. So, very quickly, firstly, about a year ago, compared to that, I suppose already good news that I'm still there, I'm still around, and the startup still exists. So, that's already a pretty positive note. To give you a bit of context to what does Weequity do, we enable investment funds to very quickly identify and assess the sustainability of their investments through a number of different data solutions. A year ago, where did we start? Where were we when I was on this stage before, where some of you are going to be pitching? Actually very simple. I had co-founded it with my co-founder Frank. We just hired the first 2 people, so we were 4. We had started already doing loads of product research, meeting a variety of potential clients, building the sales pipeline, understanding the customer needs, converging towards the main use cases and the pains that we were going to solve, and then most importantly, testing a variety of different solutions through MVPs, by getting feedback. Now, a year later, where are we at? We've raised a bit of money, so we did two pre-seed rounds, raising around 700K with business angels in Belgium. Some of you might know some of them, like Piet Kolleruit, Pierre de Meulenaar. So those are the ones that have been supporting us through this journey. This enabled then quite significant changes in the team. So now we're 8, should be ending the year with 10 of us by the end of the year. And most importantly, our product has been live since this summer with clients getting onboarded bit by bit on the tools and using it and giving us very valuable feedback. So that's been really kind of, in a nutshell actually, when I think about it, it's kind of crazy that you can summarize a 1-year journey in a few lines. And at the same time, that's actually, you can put the few highlights and really emphasize what we've achieved since then. At the same time, just putting those bullet points of where was your team yesterday, what was your team today, where are you in terms of product yesterday, where are you in terms of product today, same with your sales, hides a lot of reality, which I want to emphasize a bit with the entrepreneurs in the room. And I would say actually 2 main challenges that have been the most difficult as we've been embarking on this journey and going on it every day. One is a question of, it's just a human challenge. Here I'm going to be a bit cliche, but it's really been materializing in a variety of different ways through our journey. Hiring problems, if you launch a tech firm, finding the right people, hiring them, convincing them, finding the right package through both salary, stock options, long-term plans, and really most importantly, a right startup culture that enables them to thrive, be happy, and really feel motivated and part of the team that is actually achieving a certain vision. So there's a really human aspect of the challenge. And I would say the second main challenge is really one of just trying to establish bit by bit credibility. Because you want to kind of transform and disrupt the financial sector. they say they're willing to transform and be disrupted, then in reality, once you actually start getting on conversations, trying to start pilot projects with them, the reality on the ground has been quite much more challenging and difficult. But bit by bit, as you start building up a name, you build reference cases, things can actually really materialize and get some really interesting partnerships going on. For us, for example, we've been now, since our product's been live this summer, onboarding a number of the biggest asset managers here in Belgium on the solutions. And it's a work, like they say in French, of longue haleine, right? We've been doing this and engaging conversations for more than a year now, bit by bit, building that relationship, understanding the pains, and really emphasizing the value proposition. The final thing I'd like to kind of touch and share with you is one of the most things I personally as an entrepreneur have been really focusing on is just embracing the uncertainty and enjoying the journey. I think that's the main thing I could share with the entrepreneurs in this room before they start pitching, is focusing on, accepting that the unexpected is going to continue happening, continuing to think long term whilst putting out fires in the short term, and enjoying the journey, because if you don't enjoy the journey, there's no real point in starting your business and being an entrepreneur. So yeah, happy to answer a few questions. I try to keep it very short, and good luck with the pitches. I'm sure you'll do great, and I'll be very excited to hear about all the innovations that you're bringing to the market. Thank you.
Any question in the audience? No? Jury.
Thank you very much. Good luck.
Thank you, Gabriel. Now, before welcoming our first participant, our first pitcher for the second round, I just wanted to remind you to vote for your favorite fintech. So you just need to go on the BABAUD app, find in the agenda the pitch sessions, and there you will find the polls. They are available, so don't hesitate to vote. And you will be able to choose for the fintech who will win the Fintech Pitch Awards. And now, without further introduction, Willem LAMBRECHTS from Byrssa, the floor is yours.
Thank you. How does it work?
Just need to. This is to go forward and backward.
I see myself. Good morning. My name is Willem LAMBRECHTS. I'm one of the founders of Byrssa and the spokesperson. One of my co-founders is Matthias here, and then there's also Gabriella, who is based in Prague. I'll start with the question, what is Byrssa? Well, Byrssa is a digital platform for safe-based equity crowdfunding. That's a whole mouthful. So what is it? What is it about? Well, when you look at the fundraising process, you typically have two big milestones, one being the pre-seed or seed or angel investment, typically when a company and startup doesn't have revenue, maybe not a product even, so difficult to put a valuation on. And then secondly, you have a priced round, typically can be a Series A or whatever, or in our terms it would be a security token offering. When you look at the fundraising process, it's typically the same for every fundraising. You start with research, and you can see it from a startup as well as from an investor perspective. You go through discovery, you go to outreach, then there will be hopefully a match, and finally a deal. Now, there's quite some platforms that do that, except they go mostly for the first four, and we will focus on the last one, the most important one at the end of the day, which is the deal. Why? Because the deal has two major challenges. One being the contractual and process aspects, one important thing, and the other one, maybe even more important, is the valuation. How the hell do you value a startup when you don't even have a product, or certainly not revenue? And therefore, we have been helped by Y Combinator, the incubator in the US. They engineered a typical sort of contract called SAFE. What is SAFE? SAFE is the abbreviation of Simple Agreement for Future Equity. And what it does is two things. Basically, it postpones the valuation of the company until a later stage when there is revenue, when there is a good product, and so forth. And secondly, it is a standard template, a standard contract template that makes it very easy to come to terms because there's only a few variables. I won't go into detail here, but what it shows is that an investor who would invest for €500,000 in through a safe contract in a startup can end up at a priced round with a value of 1.3 million euro. I don't have the time to explain it here, but if you come to our booth, I can explain you in detail how it works. In our program, this is what we schedule for next year. 2023 will be the year for the safe-based seed funding platform. The year after, we will move to the second phase, which is a priced round. And we will do that through security token offering. And I know there is some specialists here in the room who know a lot about security token offering, blockchain, and so on, and they will help us. This is our roadmap, but what I wanted to say is want to give you a few numbers that are important. First of all, we are looking to raise 800,000 euro in total in different stages, starting with 200,000 euro for building the foolproof seed-based platform. When you look at, or when you want to hear about the business model, it's very simple. It's a one-off for creating the contract. It's a monthly fee for the startup. It's a monthly fee for the, relatively low monthly fee for the investor. And when there's a deal, there's a small percentage that goes to Byrssa. And while you will see who is part of the team, I will conclude by saying there's three things that are extremely important for us. And these are three words: simplicity, convenience, and security. And that's all about it. It's much more about that, about these three things, than about technology per se. But of course, we are helped by the technology. Thank you very much. Questions?
I can start. Here.
Yes.
Hello. So focusing on safe instruments is a result of feedback from the market that valuation was the biggest pain point for crowd investment.
Yes.
Because you I don't know if this is the case, but I trust you. But you wouldn't think that when you look at the other equity crowdfunding platform that you have out there. So this is what you've felt was...
at this point, as I understand, we are the first one, indeed, setting up such a platform in Europe based on SAFE. The big advantage of SAFE is that it protects you as an investor as well as the founder. You as an investor, when the company does better than expected, you take the benefit of it. If it does worse than you expected, then you get more equity. But at the end of the day, you get value for your money. The only scenario where you will really lose is when everybody loses, when the company goes belly up. But in all other situations, as an investor, you are a privileged...
Can a retail investor invest in SAFE?
Sorry?
Can retail investors invest in SAFE, or is it only
in theory, yes, but in practice, I would say no, because then it becomes too complex. In our case, we put a bottom limit of 50,000 euro for an investment. So that's not the retail market.
Hi, Willem. Can you articulate the key impact or benefit you generate compared to just transacting a normal SAFE the normal way?
It's the process. We have standardized SAFEs where you just need to fill in a few parameters, the cap, the discount eventually, the amount of money. And we have SAFEs created in every European country, or we are having them created in every European country. So when you're a Belgian startup, you can get Belgian SAFE to work on. If you're in Czech Republic, it will be Czech SAFE and so on. So it's all about convenience, ease, and security. There's no rocket science. Okay.
Do you have any idea how many of the seed funding is in the SAFE form?
I don't know exactly, but I do know in Europe it's not much. It starts getting foot on the ground in the UK, but in the US it's very much common practice. And as a matter of fact, I learned it by my son, who has a startup and who has been funded by SAFE in the US. And there it's really common practice because it gives a lot of advantages both for the investor as well as for the founders.
I saw there were some questions in the audience. Yeah. Can I have? Here you go.
So how does a company choose between the options of the SAFE? Because you shared there was you could use a dilution and a cap, both a cap and a dilution, a discount, no, right? How does a company chooses between the options, or how do you advise the company on which option should they use?
Well, we don't recommend how it's be used because it's one of the things we are determining ourselves, which for us would be the most practical way. And I think it's it will end up being a sort of a negotiation between the investor and the startup. But indeed, the 3 parameters, anti-dilution is there by default, but there's 2 other parameters that play, which is the discount and the cap, and that's the subject of negotiation. But all the rest, the framework is standard, and that's what makes it very easy.
Thank you.
Any more questions?
Then, thank you for your presentation, Willem.
So, simple, safe, and secure. Thank you.
Willem? 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 Sorry. Oh. Let's now welcome our next pitcher, which are 2 pitchers from Karbonalpha. So there's Xavier BABAUD-DULAC and his colleague. So the floor is yours.
It's here, the green one? Okay.
Green one to go forward, the red.
Okay. Hello, everybody. Let's talk about the wealth management approach, advisors, especially for the IFA that we well known about independent financial advisors. So this is what we are going to talk about. We are talking about... is it here or not? Doesn't work? Oh. Okay. So just after the pandemic situation, we are in paradigm shift of the situation for an individual approach, for a special at first for France, and then we will see for the rest of the Europe. When they want to approach some clients from face-to-face, it's very difficult after the pandemic situation, and for a part of it, they will be in prison with themselves. And according to the regulatory, which seems to have an approach to change the way that we can approach this market and these clients. When you try to move and to jump into the individual aspect of your market and your job, when you are a former banker, when you are a former notary, when you are a former accountant, and you want to jump in the IFA world, you have to master a lot of things, more than you can expect at first. So that is to say, for not only the commercial aspect, but behind all the aspect of the market and the job, you have to master the compliance approach, all the rules that the regulatory impose to you, and at the end of the day, it's lots of fear for the IFA. That we learn from that is to dedicate our platform on one platform to all the aspects, of course, of the IFA approach and advice, but before this, to ease all the kind of advice that you can done on the final approach, on the final solution for the clients at the end of the day. Karbonalpha is a B2B2C solution. So you have to master this. It's very difficult. First of all, in this kind of job, you have to listen. Leonardo da Vinci said that if you listen carefully, you have 2 brains, yours and the others. So this is the first aspect of this kind of job, listen carefully. Then you have lots of data. What you are going to do with all the data? On our platform, it's a sort of funnel. First of all, at first, you have to meet the clients. Then you collect. From 2 to 6, this is what Karbonalpha handle, master, manage, for all IFAs on the French market at first, and then for the rest of Europe. So at first, the data, then we collect, then we digitize, then we can advise in the best way you can, because at each step, since the beginning, compliance is a part of the process, which is the main difference with some competitors well established before us. So you have the constellation that you saw before. Karbonalpha could do everything. Then you can dedicate for IFA, grouping, or family office. And then, of course, they stay independent. We are just on a white label. So they keep their own customers. We just ease them to do their job properly. And then they can be operational very easily to the end clients. That's the main purpose that we build. So this is we are taking this job very seriously, but we want to have some screen very easy, very enjoyable to work. This is the way that we work. And for the another part, I let my DTE to speak about the technology of this platform.
At Karbonalpha, we believe that technology has the power to increase human potential. our company is bound to simplify AFA approach. In our way of thinking, complexity is a UX enemy. Go back to the previous one, please. Our main obsession is UX. Maximum 2 clicks away from your action or the information you are looking for. See our solution as a stack of multiple connectors. For example, we built for compliance an API, and this tool can be configured to generate data and documents in several languages, for several countries, and for specific areas. It's connected to World Funds database, insurance companies, and for online subscription and aggregation. Our technical and pragmatical approach led us naturally to the blockchain technology. Starting from now, every steps, every action, mails, events, meetings, video conference are written and time-stamped on the blockchain. It leads us to 3 strong ideas: immutability, unforgeability, and confidentiality. Aoife can produce at any time a certified audit track in case of control or dispute. Let's talk about carbon neutral for next year, one of our main ambitions. From the very beginning, we are working on tools that reduce and quantify carbon print. Karbonalpha works with active partners to bring to their members and partners a true solution towards carbon neutral print strategy starting from next year. Our next developments are based on 2 main axes: bring aggregation and tools to the final clients, and involve partners and around finance, bank, insurance companies, fintechs, VCs to expand ourselves and increase and optimize our technology exchange.
So we are young, but not so young according to our experience, and we try to be a sort of pioneer on the blockchain approach, especially for traceability, for invulnerability of any kind of process that you can disrupt and propose to our partner, which is our IFAs and wealth management advisors. Thank you.
Thank you.
I have a question. What feature do your clients use most?
They need to have some solution to simulation at first. They need to have some solution of diagnostic, and then when you have this part of diagnostic, but in each step you have some compliance stuff according to the regulatory. So in each step, in each features, so you need to have the compliance. What we combine, it's since the beginning from data. With 1 click, you go to a dashboard, then a big dashboard of your activity, then you go to a dashboard for the client, then you go eventually to the path of any kind of process to sell some financial aspect. We have a specialty on the life insurance company, especially for the Luxembourg one, because it's very specific, even in the whole country of Europe. So this is what we do. But in each step, it's not the way that the main difference with any kind of competitors is that we plug the compliance approach with any kind of advice, with any kind of items, with any kind of features at each step of the development. Especially when you want just not to buy or sell something, but at first to advise. And when you be in some of legal issue with a client, maybe in the future, or maybe with a regulator in case of control, in each step you have some log on the blockchain, and you can justify any kind of step.
Maybe I have a question. That you're independent of which kind of financial instruments that are being advised or being traded, or you have a specific focus there?
Maybe it's on the technical aspect.
For the technical aspect, we are plugged with Quantalis, French solution, that displays and provide some financial data about companies.
two main partners, in fact, in the frame of the way we work. Cantel is for all the databases on the financial market, and then the Creeper, which is another company for only for the wealth management diagnostic. Those two companies are out of them, but we are connected with them with API, and then we plug all the data, and we Olivier master all the process, all the code, our own code, to ease on every kind of aspect of this kind of market and job.
Can you manage the compliance then of insurance, equity, bonds, all the instruments? Is that?
Yeah. For example, Luxembourg is very well famous for the life insurance company, for example. But if you go behind this, all the tools are coming from ages. So we are very young, but we are starting discussion with some life insurance companies, especially in Luxembourg, to modelize the process. For example, it's possible for them to digitalize a PDF contract. So okay, we can do this. Let's work together.
Thank you. Any question in the audience? No? Then thank you for your presentation.
Thank you.
Thank you.
Let's now welcome our next speaker, Thomas KETCHELL from Curvo.
Hey. Good morning, everyone. So I'm Thomas KETCHELL. I'm the CEO and co-founder of Curvo. And Curvo is really to superpower your savings through passive investing. And why? Because the financial future of our generation is under threat. And when I talk about our generation, I'm talking about Gen Z and millennials. Why? Because there's a looming pension crisis and savings accounts are simply not enough to deal with inflation. And good investing is actually very difficult. So you need a mixture of education. We're talking about books, courses, YouTube lessons. You need that self-confidence because bad decisions are really costly. And the odds are really stacked against you. So the majority of do-it-yourself investors, they actually underperform. And so when you put them together, those three combinations, it's extremely difficult to do it via Revolut, via Bucks, or via Trade Republic, which are all neo-brokers. And that's why we built Curvo. Curvo is good investing for the next generation. So you sign up with It's Me. We gather your ID information, you fill in a questionnaire, you're assigned a portfolio, and then you can invest in those index funds which are tailored to you and your goals. All the funds with Curvo are ESG, so we remove all the companies that are destructive to the planet, and more importantly, we remove all the complexities of good investing. So through Curvo, you can set up a monthly savings plan, we fetch the money from your bank account, and it's automatically invested. A couple of more benefits. We offer fractional shares. We're one of the only ones in Belgium to do so. So that means all of the money that you invest from 50 euros is invested, and there's no stock transaction tax because we work with institutional funds. So meet Charlotte. She's one of our power users. She wanted to invest with a broker, DEGIRO, but she wasn't sure how to start. She didn't know what ETF to pick. She didn't know if she had to take accumulating or distributing. She didn't know which stock exchange to buy. And then she found Curvo through YouTube, and she realized that Curvo provided her with a plan. And Charlotte's not alone. So we launched exactly 1 year ago, and we have now over 500 customers who've collectively invested over 1 billion euros. In a down market, we're pretty pleased with these numbers, and 310 of our customers have a monthly savings plan. So that means we're talking about over 50,000 euros is invested automatically every month. And we're really targeting 137 million Europeans in that age category of Gen Z and millennials. And so the price for using Curvo, it's more expensive than buying ETFs yourself. It's 1% per year on the total assets under management. And so how have we grown to over 500 customers? Well, we run a process of experimentation to find cheap and repeatable channels. A lot of it is Google, YouTube, so we provide a lot of educational material for Belgian investors. We have online communities on Facebook, LinkedIn, and on Reddit. And of course, mainstream media always helps to get a bump in new users. And we've been covered by The Date, Blovy, and Le Soir. And so you're probably thinking, okay, how does Curvo fit into this competitive landscape? And so you'll see there's a lot of banks, there's the incumbents, there's robo-advisors, and there's brokers. And the big differentiation between us and the banks and the brokers is that we provide automated investments with financial planning, but with a clear focus on Gen Z and millennials, which is our persona. The whole industry usually focuses on high AUM. Well, we focus on the other way around. We want everyone to have access to the stock market and to invest for their future. And that's our vision, to solve the pension crisis for our generation. So I'm Thomas Ketchell, I'm the CEO. My co-founder is Jeroen Brandsma. We're best friends from high school. We went to school together here in Belgium. We launched our first startup after university, which is Sutori.com. It's a US-based company. We have over 2 million users. It's a profitable business. And we came back to Europe in order to launch Curvo. And we proved through our first year that we can execute. With only 25,000 euros, we were able to launch in a super regulated space. And that's why we're now raising 500,000 in our seed round. The goal is to grow to 9,000 customers and expand Curvo to the Netherlands and France. So thank you very much. I look forward to your questions.
Hello. Thank you for the pitch. In terms of the business model itself, right? So like any wealth management business, this is really, for this to succeed, you need to really be operating at significant scale. It's an AUM business. Have you considered going down the B2B2C approach and working with partners as opposed to trying to acquire customers directly from communities and other online forums? And if so, who do you think the best partners could be?
Yeah, it's a good question. So, there's a couple of companies in the space. I think, like Gambit, then working with BNP, with Birdie. And so it's a matter of choosing those battles. Right now, we think we have a plan to execute independently, and we think we can grow to as many customers as we can in France by expanding to France and Netherlands. So we want to still build a consumer company. We've had offers for people to white label our onboarding and our UX and our app. That's not something that we're interested in because a lot of what we create is in-house. It's just Jeroen and I. And so we think we've got something that can really grow as a consumer model. But if we can't reach those targets, then yeah, we're easily able to pivot what we've built.
Okay, and what AUM do you expect if you hit your target of acquiring 9,000 users or 10,000 users?
Yeah, so, well, now we have data from the first year. So as you can tell from the numbers, it's roughly about 2,000 euros per customer that's invested. We expect that to grow as the markets grow as well. Obviously, we're such a down market right now that it's difficult for people to make that extra step and invest more money. But where we're really targeting is that 20 to 50,000 AUM per customer. And so we're just going to, wait it out right now and hope the markets pick up in the next couple of years.
Okay, thank you.
You have 500 customers today, so it's not much, of course, for consumer market, but can you already size the granularity of the market beyond the overall target? Can you already profile more sharply the kind of people who are low-hanging for you?
Yeah, so for us, it's really that 25 to 35-year-old category.
Beyond that, I mean.
So, for example, the example I gave with Charlotte, we're really looking for young professionals who have already started to download a brokerage app or DEGIRO, and they want to start investing, but they're just a bit confused. And that's really the target that we've been getting in Belgium with little funding, so people are finding us organically. And that's where we really see that there's a huge opportunity because nobody is really handling those low AUM customers. And that's where we see it growing in France and Netherlands. So really that persona of someone who's just got their job, started to get a salary, wants to build a savings plan, but doesn't know how to buy ETFs themselves.
Any gender gap?
Sorry?
Any gender gap?
Yeah, so right now, Charlotte's one of our main personas. We have 75% male, 25% female. We want to grow that, obviously, but it's something that we're still exploring. And that's why we use Charlotte as one of our super users, because she's, really onto something.
Any other questions in the audience? No? And from the jury? No, you're okay. Then thank you for your presentation, Thomas.
No problem. Thank you. Cheers.
And now let's welcome our last participant for this morning startup speech battle session, which is online, as I understand it. So, Paul RÖESLER from Oxari, can you hear us? Oh no, sorry, it's Metamaze. So, the floor is yours. Sorry.
Thank you. Hello, everyone. My name is Niels. I'm one of the co-founders and CEO of Metamaze. The slide should go on there, I guess, soon. Voila. So with Metamaze, we are solving a problem that has existed for way too long. And actually, that problem is manual data entry. And specifically in the financial industry, banking and insurance, way too many companies are still spending human resources or allocating human resources to manually interpreting data, documents, and emails. So what does this mean? People are still reading documents, interpreting them, and then typing over that information into some sort of system, whatever system that might be. And that actually is quite a big problem for every stakeholder involved. For the employees, it's just very boring work. No one really likes to do it. It's non-value adding. And with the war on talent going on, people are just very likely to switch jobs to something that is more interesting or that adds more value. And that's, of course, a problem for the employer itself in the end. For these business managers, they are feeling increasing regulation, more pressure on the margins. They are also feeling this war on talent because people are leaving them. And they need to look for ways to become more efficient and effective and to do more work with less resources. C-levels, they're wasting a lot of money in their company on this manual data entry process. So it's estimated that more than $400 billion is wasted yearly on manual data entry. And for the more strategic people among us, they feel like they're lacking the insights that are hidden in all these documents, because there's a lot of data in a company that is flowing or that is going around, but a lot is hidden and locked in documents or in emails, which is unstructured, because it's natural language, it's human language, and it's by definition unstructured. So the problem is huge, and it's also demonstrated by the market of intelligent document processing, which is growing at 35% year on year, estimated to be above 6 billion by the end of 2028. Also, 1 out of 2 business leaders indicate that they want to automate, that they want to make their process more efficient by implementing artificial intelligence, for example. But still, it's not easy. You would think it's a no-brainer, but finding the right solution is difficult, because there's a lot of different solutions out there that claim to do these types of things, but actually finding them is not easy, because what you want is a solution that is sorry, the clicker is not working, voila, that is intelligent. You need it to be able to interpret unstructured data. A lot of solutions are focusing on structured formats, layouts, templates, but most of the data that you have is unstructured. It can take any form, any layout. So you need it to be intelligent, you need it to be scalable, because you are processing way more than just one document type in your organization, and you don't want to implement 20 different solutions. You also want it to be easy to deploy so that your current team can operate it. You don't want to put in place a new team with other skill sets. And you want it to be flexible because it needs to adapt to your processes. And you don't want to adapt your process to a tool that you're implementing. And that's actually why we've built Metamaze. So what Metamaze is doing is we are ingesting any type of document, which is unstructured, and we make it structured. We classify it, we extract data from it, the data that you specifically need for your process, and then we output it to any other system that you want it to be outputted to. How do we do this? So why are we different? We've invested a lot in R&D, in the algorithms behind it. We're 10 to 40% more accurate, and we are 4 times faster in onboarding new use cases and customers than other solutions on the market. So we really focus on decreasing the time to value, because it's all about being as fast as possible in implementing automation, because otherwise you have projects that drag on for months and months and get to no results in the end. That's what you don't want to do. A few use cases, not going into too much detail. We work for Europe Assistance together with a partner, and we are automating every incoming communication. So the info at mailbox and the claims at mailbox, a lot of documents and emails end up in there. We automatically classify them, we extract information from them, and then we push it to other systems for the emails or the documents to be executed. We also do this for AXA Krelan in the credit department, so all loan applications, a lot of documentation is flowing. We automatically interpret them and output them so that the credit analysts can focus on value-adding tasks, going in dialogue and advising customers instead of handling the paperwork. So we've been founded in October 2020. In the meantime, we grew the company significantly. 2021 was about product market fit. In 2022, we accelerated the go-to-market. We grew from 8 to more than 30 people. We now have more than 40 licensed customers. As I said, we differentiate through accuracy and time to value. And we're on track for 2022 to achieve 160% growth rate compared to 2021. We also raised 3.2 million in growth capital over these last 2 years. And we're very proud that we were mentioned by Gartner and Data News and recognized for the technology that we've built and the growth and the pace of growth that we were able to demonstrate. We have a very scalable business model that's demonstrated in 2022. We are now really accelerating the go-to-market. And what's next for us? Going international. So of course we want to scale locally in our home territory, but we want to expand globally. So I've been in New York last week, still a bit jet-lagged, and we are now really preparing our international go-to-market as we speak. And of course, to do so, we will focus on partnerships, technology alliances, and continue the R&D efforts and development efforts on the technology that we have at hand. So that was it for me. If you have any questions, let me know.
When it comes to your positioning in the market and your competitors, what do you see as your edge relative to, say, the big tech companies like Microsoft, which are beginning to launch similar solutions and features for their enterprise customers, and then also the more upstart in the space and the RPA companies like UiPath that also offer some of the same automation and extraction functionalities. You're obviously solving a very real pain point and have got some good traction. So why is it that your customers are coming to you instead of perhaps using those other alternatives?
Indeed, there is competition, and we know that. Now, the fact that there is competition for us is good news because that means that there's money to be made and that there's a market. How do we differentiate? Is what I said is the time to value and time to the most value possible. A lot of the technologies out there focus on the easier documents, which are structured or semi-structured. We really focus on what is very unstructured. So the very complex documents. So we've also worked on cases such as, for the people who are familiar with it, fund prospectuses, bond prospectuses. These documents are that diverse. They can be 2 pages, but it can also be 100 pages, and you always want to find the same information. So focusing on those very complex cases where typically there's a lot of value to be made, and then facilitating decreasing the time to value to automate them, that's really what we focus on. And I think we're also in a position to do that better compared to the big tech vendors. We are more agile. We are, for now, we are local, of course, and we have a smaller team that is able to shift gears quickly if needed. And we also see that it's not, although the big tech vendors are also in this space, it's not their core business, so they will never be as focused on just having this data capturing part right and top-notch. And of course, it is our core business, so that's where we focus on.
So that's a perfect transition to my question. You mentioned you have 50+ use cases. Are you going to focus on specific use cases as you scale? Specifically, if you start to transition to an outbound sales strategy?
So the platform itself, the technology is use case and industry agnostic. So we work in finance, but also in logistics, government, etc. That's really where we try to be. But over time, what we are doing is we're building up a marketplace of proven use cases. And of course, we will use that in go-to-market in sales because it facilitates or it shortens the sales cycle and it facilitates the sales process. But also in delivery, once we have put in production like a specific use case, we can open up this trained AI model to be able to extract the data from that to other customers as well, again, decreasing the time to value. So it's not that we are focusing on one use case as a company. We are agnostic, but over time we are developing a catalog of proven use cases that they can just tap into and they can start deploying from the start. So actually, we have a platform, a generic platform approach, and we are moving towards having a lot of different point solutions in that platform approach over time.
And in the go-to-market, then you bring this to market yourself or through vertical partners, and how do you split the pie?
It's a combination of both. So specifically in the beginning, we focus a lot on direct sales and going to the market directly. Also, and we will continue doing for specific customers and industries because we want to have this relationship with key customers and get a lot of feedback from the market. But we have a very outspoken partner strategy. Can be a reselling partner, implementation partners, but also technology partners where we are acting as a module or as some sort of component in the total solution. And we have a KPI that by the end of this year, more than 60% of our revenue should come through partnerships. Because either they know the markets better, if we talk about vertical partners, or they have more delivery capability. We're a product company, so we're not scaling our delivery team and our consultants at the same pace that we want to scale our customer base. And therefore, we rely on partners as well to do the implementations. And for them, of course, there's also benefit in selling the project behind it.
How relevant is the language when you approach new linguistic zones?
So actually, that's going into a technical a bit, but our models are language agnostic, so we can basically handle any language. The only blocking factor that we might have in terms of languages is the OCR support. So before we can interpret or let the AI engines interpret a document, we need it to be OCR'd if it's a photo or a scan. And so for now, we are blocked by the languages that Google and Microsoft in the OCR support. And for now, it's 54 plus languages, so it shouldn't be a bottleneck.
Thank you. Any question in the audience? No? Then thank you for your presentation.
Okay, thanks.
Yes. And now let's finally welcome to our final participant to this morning's session, Paul Rousser from Oxari, who is online, as I understand it. Paul, can you hear us?
Hi, thank you. Can you hear me?
Then the floor is yours.
Thank you. Yeah, it's not Paul pitching. It's Willem, one of the other 4 co-founders of Oxari. I am here on Tenerife, one of the Canary Islands. I'm here for a conference about climate resilience. And you are gathered with the creme de la creme of the fintech companies. And that's really insightful, and that's really helping everybody to find real green growth. I think that's what we all do. We all strive for a better world. We are all focusing on impact. However, looking at the carbon footprint of companies, it's a bit worse than we expected. And now I'm hoping that yes, it works. Yeah, because what do we see? We see that 40% of all climate warning emissions are emitted by listed companies. And that's something we have to stop. So this is data from Bloomberg, and we all see the trend here, and we aim to decouple this trend. So what we try to do is we try to find opportunities of companies that are able to grow economically while decreasing their emissions, and that's hard to do. That's a big challenge, like I said. So why? Because data, ESG data about corporate sustainability, it's incomplete. It's non-transparent and it's expensive. Incomplete because of gaps in reported data. Non-transparent because of the low correlations between several ESG frameworks, and also expensive. For example, a license of using ESG data to $10,000s of dollars and euros every year. So that's why we came up with a solution. We use artificial intelligence to fill in the gaps in those data sets by identifying patterns through the industries over countries, and also worldwide. We compare companies in the same field. That provides you with a comprehensible assessment of the financial and environmental sustainability performance, therefore clarity, and it's also low cost. So what is the market then? Well, the market is growing. Almost 4,000 companies already have signed the Principles for Responsible Investments. They have over 1 trillion, over 100 trillion US dollars in assets under management. So that's a lot. And also think already about the impact that you make if all these companies are striving for that real green growth. So analyses performed by Deloitte already show that the ESG global market is worth 1.3 billion US dollars in 2022, with an average growth rate of 50% to 2025. What are then people and institutions that use ESG data, and who are our main target groups? Well, for example, sustainability consultancy firms. They can do interventions in companies, try to find potential for improving their ESG ratings, try to improve how sustainable they are, but also large corporations itself. Given the institutional investors, pressure from NGOs and also governmental institutions, there is always a trend to become more sustainable and greener. So, for example, the EU has that legislation in place, SFDR legislation, that also aims to make companies report their data, make companies report their emissions. And that's important because that gives us real insight into their impact, their environmental impact. So what have we developed so far? The carbon estimation tool. That was our first tool. We're very, very proud of the tool. And it uses non-environmental corporate industry national data to calculate emissions. So what you can do is you can go to our website, you can play around with the tool. For example, the temperature score, that's also an indication of how compliant is the company with the Paris Agreement. Very intuitive tool. I would definitely recommend you to try it. What have we under development currently? One of the most interesting ones, and also one that can be used by previous speakers, is I think the portfolio builder, where we use financial data, environmental data to evaluate companies. So I will skip the impact model for now and go to the team, because we have a diverse team, different cultural backgrounds, different study backgrounds in banking, research, but also in machine learning, artificial intelligence. And together with a team of dedicated employees, I think we are on the right track to do the job and strive for that better world together and find real green growth. Thank you.
Any questions from the jury?
Yeah, I can maybe kick off. Just a question on the competitive landscape. Willem, can you clarify a bit on that? Who are you competing against?
Yes. Yes, so what you see is that, for example, companies like Bloomberg, MSCI, those are potential direct competitors. However, if you look at them, that's our competitive advantage. First of all, the pricing, but also they have to do assessments of individual companies in order to generate that high quality data, and we use scrapers and try to get the data from the annual reports, but also the quarterly reports and news articles. That's what we are also currently developing. And that's also in the end, since companies have to report in the future, there's also more and more data becoming available. And that's where we are ahead of the market in using those machine learning models to really outperform the competition.
So you're focused on capturing the data, but not on the taxonomy side, so on transforming it into the way to report it, or how do I?
Yes, both. So on one side, we scrape the data, and on the other side, we also perform analysis. So for example, the very nice tool is the tool that indicates how compliant a company is with the Paris Agreement, where we all agreed, okay, we have to limit the global warming to 1.5 degrees. And with our tool, you can choose from 3 technological advancement scenarios and also 3 policy scenarios. So, for example, if a government is very strict in terms of climate policy, and you assume that the technology will evolve mediocre in the coming years, company X has
we cannot hear you really well, William.
Yeah. Okay. Is it better now?
It looks like it.
Okay. Yeah. So what I was telling is the compliant with the Paris Agreement. So where we all agreed, can we limit global warming to 1.5 degrees? With our tool, you are able to choose from 3 policy scenarios, from either very rigid to very loose, and technological advancement scenarios, also from low improvements to high improvements, and see, okay, how on what trajectory is this particular company when it comes to global warming. And that can be 1 degree, but what you see is that, for example, when the government has very strict policies, that a company is reducing the climate impact and therefore is a trajectory of less global warming. And that's very interesting to also see, okay, company policies can be effective.
Okay. Any other question? Yeah.
Thank you for the presentation, William. A question on the robustness of the inputs and your outputs. As you know, there have been several, or a few high-profile cases and scandals related to greenwashing, inaccurate ESG data reporting. So to what extent are you taking steps, or is the company taking steps to ensure the accuracy of the data between your data capturing and the evaluation of the analysis that you're carrying out in terms of supplementing the company input data or the company provided data with external data sources and other frameworks?
Yeah, that's a very, very good question. And what we try to do is when we scrape data, we have our algorithms to validate the data. So what you see is, for example, in gas industry, given certain dynamics of a company, we are able to calculate, okay, what is the bandwidth of emissions, historical emissions, but also future emissions. And that's the trick here. Because what we can also do is, given the characteristics of a company, model future data points. And that's exactly what prevents us from greenwashing, but also can be used as an indication of an assessment of reported data. Is the data that's reported by a certain company, does it make sense or not? And that's what is incorporated in our machine learning models.
Okay, thank you.
Any other question in the public? No? No further question? Then thank you for your presentation, William.
Thank you. Thank you.
This is now the end of the startup session for the pitch battle. Once again, would like to remind you to vote on the BABAUD app for your favorite fintech. That will get the opportunity to win the Fintech Pitch Award at the end of the day. The award ceremony will start at 5:45 p.m. At the end of the day. And then don't also miss the fantastic networking party, which is offered by Blackfin. Oh, sorry. Someone's playing with me. Which is offered by Blackfin, the European Digital Finance Association, the Fintech Belgium, and visit Brussels. So I wanted to thank once again all the members of the jury. Thank you guys for joining us. Wanted to thank again all the pitchers for today. It was absolutely great. They were tremendous projects. So really looking forward to see who's going to win an award. So thank you guys.